as much as we like that those ridiculous APYs, my co-founders and I, we couldn't figure out a way to lock in the rates, because I think innately most of us wanted some sort of certainty. And that really prompted us to think about how we could create an instrument to fill the gap that we were encountering. And that was the ultimate motivation for us to build Pendle.
Hey everyone, welcome to the LevelUp podcast, presented by the Medici Network, the exclusive community for financial institutions to engage with blockchain-native funds and founders. I'm your host, David Breiter.
And I'm your host, Sean Farrell. Before we kick things off, make sure to hit the subscribe button and follow us on Twitter for the latest episodes.
This podcast is for informational purposes only, and nothing herein should be considered financial, legal, tax, or investment advice. The views expressed by our hosts and guests are their own and do not reflect those of the Medici Network, Fundstrat Global Advisors LLC, Finality CP Management LLC, or their respective affiliates. All listeners should consult their own professional advisors as to the legal, tax, financial, or other matters before making any investment decision.
Now, let's get into it.
Hey everyone, welcome back to Level Up. We got an exciting conversation in store for you today. We're going to be talking about Pendle Finance. Pendle is a DeFi protocol that enables users to tokenize and trade the yield from yield-bearing assets. We will be chatting with Tien Lee, the star founder of Pendle, and Louis Thomazeau of L1D. He and L1D are staunch supporters of Pendle, and they're going to give us the investor perspective. David, how about we run through some quick stats on Pendle?
Yeah, Sean, that's great. So Pendle, ticker PENDLE, same as the name.
It's a long ticker, and David.
It is. I'm sure there's a story behind that. We'll have to ask Tien. Price is around $4 today. The fully diluted market cap's around $650. And this is the price chart here over the last year. And then here, let's go over some of the historical performance. This is the long-term chart here of Pendle. Pendle's an interesting comeback story. It's a protocol that's been around for a while, and it got beat up a bit during the last bear market. I think what's interesting about Pendle, and you don't see that often, is it's really had this comeback. A lot of teams will watch token leave. They won't innovate on the product. And after the hype cycle is gone, the tokens don't come back. But Pendle really defied that. You can see especially this chart's in log, but in 2023 and in 2024 had quite the comeback in terms of adoption here over the last cycle. And here is just a shorter term chart over the last year. It's a weekly chart. Some of the technicals just to get a sense. A lot of ways to look at it, I'm sure, but Pendle's been in this decent uptrend channel since really a bottoming earlier than most of the market here in March. Remember, the market, a lot of it bottomed in April. But it's been this strong uptrend. But I also have overlaid on this some of the DeMark counts. And these are weekly DeMark counts, which are trend reversals. And those might be signaling, we'll see how it plays out, but those are signaling a trend reversal in kind of the weekly time frame from a technical perspective. But it's also bouncing up to the bottom of that channel. So we'll see if it can hold that. What do you think on this, Sean?
Yeah, look, it's had a pretty great month or 2 months rather. And I think if it were to maybe consolidate a bit, these DeMark signals, I like to use them in my analysis as well. They don't always mean that a chart is going to trend dramatically lower. Sometimes it just means that the chart needs a breather. But I think there's probably good reason that Pendle has done well over the preceding weeks. And we'll get into that in a bit.
Yeah, who knows? Could be an opportunity for those listening to the pod that like what they hear. Here's just some of the comps and the performance over the last year. We'll talk about why we picked some of these in the comp set table, but over the last year, we've used some of the DeFi names, some of the lending names, some of the larger kind of DEX names, and maybe fixed rate name as well here, and some of the RWA names. Over the last year, there's been some better performers than Pendle. But again, Pendle did have a strong run leading up to this time period in the snapshot. And here into this year to date, obviously has been difficult for a lot of tokens, but Pendle has performed maybe just about the same as one of the best or second best just compared to Aave. It's still down on the year, but held up better relative to others. It's performed well over recent months. And here's the comp set from that we kind of selected and put together. Sean, I'll just say, I think in this table of liquid tokens, I don't think any of them are perfect comps. I think that for what Pendle does, maybe Rated X on Solana could be a comp that's maybe closer, but they don't have a token yet. But Pendle really dominates the market. But tell us, a little bit about each of these and kind of how they relate to Pendle.
Yeah, look, I think that's one of the attractive things about Pendle is that it is the dominant force in its vertical of yield trading protocols. And so you kind of have to look to a composite of other DeFi protocols and build a comp set. And there are certain elements of Pendle that we can point to that each of these different cohorts of comps has. We have, RWA focused protocols like Ondo, Athena, where each of them has some stablecoin element as well as an RWA element. I guess stablecoins are RWAs, but you get my point. Then in addition to that, you have to think about the economics behind Pendle. And so the way that Pendle generates revenue for the protocol, it receives a fee based on the interest generated from the assets on the protocol. So it's very similar to the borrow lend projects like Aave on Ethereum and other chains, as well as Camino. So we have them in the comp set. And then we also tie in the DEX volume component because there is trading that occurs in the liquidity pools on Pendle, and another source of revenue is a portion of that swap fee. And if we look to, I guess first, we can compare the money market component of this comp set based on TVL. It's priced pretty conservatively based on from a TVL perspective right now. TVL on Pendle is about 4 billion, slightly above Camino's, well below Aave. But again, not necessarily an apples to apples comparison of TVL. From a swap perspective, it certainly trails both Uniswap and Radium on that front. But I think there are certain elements of the protocol and future updates that perhaps could change the equation on the DEX volumes from a DEX volumes perspective.
Yeah, I think that's right. And I think it's important to recognize just that each of those is really only one component each, and you combine those, and that's kind of the model for Pendle. Moving on, I think this is a look here at some of the Pendle markets that are the top markets on Pendle. And you can see here that, as Sean mentioned, you have a yield token, you have a fixed price, fixed APY. So there's a principal token and a yield token for some of these markets. A lot of these are stable coins too, I'll point out. USDE is the largest, most liquid on the platform. And let's look into what that means. So here we have just a chart of USDE yield trend over time. It's taken a slight breather back from 10 to 8 over recent days, but this is probably a very useful tool for people who want to lock in this yield or fix or trade the yield, have a view directionally either way. And that's really what Pendle does, is kind of a core functionality here. And Sean, what's the market opportunity here over the bigger picture?
Yeah, look, bigger picture, stepping back, the way I view Pendle is, or what I view it as, is the DeFi version of interest rate derivatives. So it's taking this market that is massive and continuing to expand in traditional finance and making it less opaque, more accessible. And if we look to, this is data from the BIS, if we look to the notional amount of OTC interest rate derivatives outstanding, the latest number we have here is over 700 trillion. And from a turnover perspective, if we look back to, I think the latest year we have here is 2023. I mean, we're looking at upwards of 4 trillion in daily trading volume for this market. So we don't have to get too deep in the math to understand that if Pendle is able to siphon off a few bips of this market, the upside is certainly massive.
Yeah, you really need that to come on chain first. Pendle has about a 4 billion TVL, which is quite a bit of room to grow to, I'll say 700 trillion, but
just a tad.
But still strong growth nonetheless. Really picked up in 2024 around March, I think maybe Q1 2024. I think that was probably around what some might call the points trading phase, with the Eigenlayer, airdrop, the LSTs, the points trading there. People were trying to speculate on what the implied yield might be from those based on that token distribution. But the token's really reinvented itself. I think people thought after that happened, it was going to be over because that was kind of the core usage. But TVL, you can see in 2025 came back and it's ebbed and flowed, but it's still been in a decent trend up. Here's the TVL compared to some of the money markets, as Sean mentioned as well. And obviously, as he mentioned earlier, still some room to grow to Aave, but kind of a different use case here. And then one final chart, a couple of charts here is just, this is the composition of Pendle's TVL over time. Now, I mentioned that they had transitioned from points to really in other markets. Now, this is, I think it's a great chart. It's from Modular Capital. James just released a great report on Pendle that I think people should check out.
Shout out, James.
Yes, definitely shout out to James for this chart. And he's noted that stables have actually grown to be the majority of Pendle's TVL. What's making up that? That's mostly USDE, right, Sean?
Correct, USDE. And he makes an interesting point in his thesis, but there's a lot of energy around stablecoins right now. It's clear that it is one of maybe two proven products in crypto to have a product market fit. And we have stablecoin legislation coming up, and there are lofty expectations for the future TAM of stablecoins. And this could be a good way to play the stablecoin trend in liquid markets.
And that's right. And I think there's a distinction here. There's obviously payment stablecoins like USDC and Tether that don't pay any yield. And then there's yield-bearing stablecoins, which are like Athena and others that will pass back some portion of the fees to holders. And this chart is not Pendle's stablecoins, but the global yield-bearing stablecoin market size. And it's, around 6.5 billion. It's grown very rapidly. So it's a way to potentially play that trend. This is a chart here of the yield paid out per day. I think, when you run the numbers, it's maybe roughly right now somewhere between 8 to 10% as kind of the yield. So it's a decent yielding market, but fluctuates quite a bit. And then how does that yield make it back to Pendle?
Yeah, so there is a TVL on Pendle that is generating yield, and the protocol takes 5% of that yield and passes it on to a certain cohort of token holders.
And Sean, you mentioned that there's another component to the revenue. That's right?
Right. So it's a portion of the yield generated and a portion of the swap fees, 80% of the swap fees and the liquidity pools.
But hold on a second. So here we have about 3.5 billion of monthly volume, and they take what, five bips of that?
Correct.
5 bips. Okay. So 5% of the yield fees and 5 bips of the trading volume here. And then this is the DEX volume relative to some of the comps. Obviously, it's a lower turnover market. We have shown before there's a lot of potential here for growth. So we'll see how that plays out relative to the spot markets. And this is the Pendle fee trend, down a bit from the peak, as most crypto native protocols have been, but still holding very steady over the last couple of years. What do you think on this, Sean?
Yeah, I think it's interesting to note that the composition of revenue. You have a source of revenue that is inherently very cyclical, right? In DEX fees, you see that in Uniswap fee profile, Radium fee profile, but it also has that more consistent revenue source from the yield.
Yeah, I think that's right. It almost reminds me of Coinbase transitioning from a purely transactional driven market. They were previously just very cyclical with trader volumes, and then they've gotten really more like recurring fees with either their stablecoin or other SaaS products, right? So, John, Pendle has a unique way of giving those fees back to users. What's VE Pendle, and how does that work?
Yeah, so if people are familiar with Curve Finance, they pioneered this model, but essentially how it works is Pendle holders can take their Pendle, block it for a certain amount of time, be remitted a VE Pendle token, and with that token, they can vote on different liquidity pools. There are emissions that Pendle pays out, and VE Pendle holders can direct these emissions to entice liquidity to come to these certain liquidity pools. And then obviously, whichever liquidity pool that they vote on, I shouldn't say obviously, but whichever liquidity pool they vote on, that is, the volume from which they are going to derive their swap fees. So the Pendle token holders are only going to receive swap fees from the pools that they vote on. As it pertains to the yield fees, all the Pendle token holders receive those.
Yeah, I've got to say, I think, there is a value connection here I can see because, like if you're a staker and you receive some of the fees on, your Ethereum or Solana, you stake your tokens. The reason to hold the token is to stake it and then receive those fees. Right now, I guess that looks like the APY is around 30%. So that's a decent, incentive and yield. But again, as you said, there's a lot of work involved and there's a lot of selectivity that you have to do to get that. And I mean, I'll be honest, Sean, I don't love personally the current VE tokenomics. And I'd much prefer, because it doesn't really give anything back to the kind of what you'd call the general token holder, not participating. But I'd really prefer either a burn or kind of some kind of general dividend. But I'd be happy to talk to Tien about what he thinks on that and if that makes sense for all the products he's going to have and launch in the future.
Yeah, I think that's right. And here you have the historical token incentives, and these are just the emissions that I had previously mentioned.
Yeah, I mean, pretty stable, not too large of an emission, I guess. I think one of the reasons people like Pendle, it's been around a while, it's a mature protocol, but one of the reasons is really most of the supply is unlocked. You can see here, this is the token supply chart, and I think one thing to really dig into with TN is just kind of understanding, what the float is and how to think about that. I think that's going to be an important question for us and investors to understand.
Agree, especially with the tokenomics aspect. I think there are also some unlocked tokens in the treasury. So yeah, it'll be good to get his input on that.
And I think, Sean, the tokens performed pretty well. We were talking before, I think you thought, and I probably agree, that this catalyst, the roadmap they released is probably maybe a catalyst that's behind that. So far today, we've talked a lot about Pendle V2 and the way it currently works, but they have two other product rollouts, Citadels and Boros, that could fuel some growth. What is Citadels, and Sean?
Yeah, so Citadels, I would think of them as like just different instantiations for specific user cohorts. So a Citadel that they plan to roll out is going to be, tailor-made for institutions to come on chain. So, say like you call it like a KYC instantiation of the Pendle protocol. And then, you have Boros, which you mentioned. That's going to be, I think, a major improvement, or I should call it a growth vector for the protocol. And that's actually going to enable the trading of funding rates on via perpetual futures contracts.
Yeah, I've got to say, I'm probably most excited about Boros. For listeners, obviously, crypto exchanges have these perp markets, perpetual futures, which is a different way of offering futures, and there's funding rates which bring the market in balance, be positive or negative at different times, but they fluctuate, maybe every 8 hours or so. And I guess they're going to be offering a way for traders to lock that type of rate source in at a fixed rate and trade that rate. Is that right, Sean?
That is right. And I think it's going to be huge because there are a lot of, market neutral funds in this space, and just a lot of, individuals that like and firms that like to trade basis. And there are times at which you'd probably want to lock in that basis. And, I think, we'll ask Tien about it, but I'm sure, protocols like Athena would also like to leverage this to lock in rates at certain points in the market.
Yeah, and I think their hope is it can be a bigger market and scale the market opportunity for them beyond just the spot volumes. And, with perps, it's obviously a very active market. I mean, in some sense, I think Pendle maybe starts to look like more of a futures type market. Maybe it's, obviously for, the fixed perp funding rates trading is going to be obviously one component. There's more, but, maybe they start to look more like a hyper liquid. Obviously that's perps on tokens. And so you're trading the different market here, but there is somewhat similar to a futures market, and maybe that's a bigger opportunity for them. I'm excited to hear what they're looking forward to on the roadmap. Anything else, Sean, you're looking forward to?
No, that's it. A lot to unpack, a lot to get into. Excited for this conversation today.
All right, let's get into it.
Tien, Louis, welcome to Level Up. Excited for our conversation today. I think it'd be great to start with some brief backgrounds. Perhaps we start with Tien first. Tien, would love to know about your, background and perhaps discuss a bit about what inspired you to launch Pendle.
Yeah, thanks for having me. So I'm Tien, the CEO, co-founder of Pendle. My career in crypto started out, at least professionally, in 2017 when I joined Kyber as one of the founding team members. So I've had the privilege and opportunity to witness the growth and evolution of DeFi through Pendle, and eventually met a lot of very high quality intellectual people through that stint. In 2019, I decided to leave the team in search for like new opportunities. But eventually landed with the idea of building Pendle when DeFi summer happened. But in short, DeFi summer was when all the shitcoins popped out and they were offering 10, 20,000% in APY. But as much as we like those ridiculous APYs, my co-founders and we couldn't figure out a way to lock in the rates, because I think innately most of us wanted some sort of certainty. And that really prompted us to think about how we could create an instrument to fill the gap that we were encountering. And that was the ultimate motivation for us to build Pendle.
I'm curious, where did you come up with the name Pendle? It's a bit unique among DeFi protocol names.
So we actually had the name Benchmark first because we wanted the product to be somewhat of a reference, because yield curve was an ultimate outcome that we strive to achieve. But Benchmark at that point in time, I think there were maybe one or two other protocols that were named Benchmark as well. So a lot of people confused us with those other benchmarks. So we had to come up with something new. And we really started to think about the unique properties of our product and figure out some of the ways that could express these unique properties. So with yield trading, two things were very important. One is the first implementation of our AMM involved the automated shifting of weight between the assets in the pool. And then the other thing that was very unique about our AMM is that there's a lifespan. So there's an element of time. And when we were looking at the great scientific discoveries, pendulum stood out because time and weight, those are essential components of the pendulum. And that was, I think, the inspiration behind the name. But we didn't want to call it pendulum because we didn't want to commit the same mistake as Benchmark for having a term that other people could use. So we altered the spelling of pendulum to Pendle. So that's that.
That was a lot more layered and complex than I was expecting, I'll be honest. But great stuff. Louis, how about we hop to you? Would love to hear about your background, and maybe, a bit about L1D and how you came to be a Pendle supporter.
Thanks for having me, guys. So L1D is a crypto investment firm based out of Zurich, Switzerland. We invest in other funds as a fund of fund. We also invest in more classic direct investments. We're quite flexible. We do early stage, later stage, OTC, as well as liquid VC. Myself, I joined the space in 2019 as a Solidity dev initially, but my Solidity career was sort of short-lived. As DeFi summer came around, I transitioned more to the trading side of things, traded extensively on chain, then moved off chain. I guess I was kind of doing it the opposite way around as most people learn it, and then ended up joining L1D in 2022 as an investment partner. But still, trade decently actively myself on chain. And the first time I sort of rediscovered Pendle was in 2023, early 2023, when it started growing in TVL, especially around LSTs, as well as GMX liquidity provider token. Started basically providing liquidity myself. That's when I first heard of Pendle. monitored it, tracked it for a few months. And then we were lucky, as we were sort of like building conviction, we were lucky to be introed to Tien by Arthur from Defiance, another well-known crypto fund. And that's when we started chatting and very quickly built conviction and invested in Pendle.
That's great. And, I'd like to actually carry on from that. I'd love to talk about the thesis for Pendle. But Tien, maybe first to you, can you maybe tell us, you've given us an overview of what it is and the problems to solve, but maybe tell us just a bit more, diving a little bit more on that.
Pendle is a rate swap protocol. Up until now, the mechanics of Pendle involves the splitting of a yield-bearing asset like STETH or AUSDC into principal token and yield token. So the principal token here represents the principal underlying, and then the yield token is where all the yield accrues to, and that in most cases would also include the points. So at a high level, there are two main use cases between the PT and YT split. With the splitting of yield-bearing asset into these two representative assets, for someone, let's say like if I value certainty, I can acquire PT and be guaranteed of yield. So that's the fixed yield use case. And then for someone else who wants to express a view on the protocol, bullish, and wanted to double down and disregard the underlying, they can buy YT and hold it in order to accrue the points or the yield. So largely for like yield speculation. So these are the two broad use cases that we enable. And the mechanics has not changed. The vision has always remained very consistent. But in terms of the implementation, we've had V1 back in 2021, and then V2, which is the current implementation, launched in late 2022. And then further down in June, early July, we will be launching a new product called Boros, also focus on rates trading, but would also have a layer of leverage.
Louis, from your perspective, right, when you made the investment, what is like your investment thesis, as an investor around Pendle and then the product and then the Pendle token?
I would say back then we had four main pillars to the thesis, and those are still valid. They're still valid and intact as of today. And those four pillars were the team, the tokenomics, the product, as well as the sector. So to start with the team, and I think this is the most important one, what really struck us when we first looked at Pendle was how resilient the team seemed to be. They had pretty much survived through a brutal bear market, brutal price action, and even managed to thrive during this bear market. Sort of like surviving against all odds, when a lot of other teams would have just, left, gone back to their Web2 job or something else. So that was the first part. The team also seemed to be extremely ethical, and I think that impression was reinforced when we got to first meet them. The second part, the token, was also quite unusual as well, relative to some of maybe the other VC-backed plays back then. It had a very healthy distribution. Most of the early investors, whether it's whales, VCs, got flushed out and pretty much sold at the bottom for pennies. Pendle had a very high circulating market cap. Most of it was liquid, and the inflation was relatively low. It was also quite clear that the team wanted to focus all the value accrual to the token, whether it's accruing the fees, not launching any extra new tokens. And all those factors for us made it a very interesting proxy to back the protocol, so that it was worth investing in the token. The third pillar was the product and the community. I think in terms of the products, they were building for sort of like a real use case. There was not only another L1 just tech, but it was an applied use case to the DeFi sector. And the team seemed to be building community first, focusing on UX, having a very strong core user base of power users. So that was very important for us as well in terms of traction. And the last fourth pillar was the sector itself. We associated Pendle with the DeFi yield sector. So back then, that mostly represented LSTs, lending tokens, as well as GMX liquidity provider token. I remember the size of that, all those combined was roughly $15 billion back then. So it was a decently large market. I think that the thesis on the sector itself sort of like got refined over time as we then saw LRTs come into play when we invested. So December 2023, LRTs basically didn't existed. Then it grew to become quite a large sector. And over time, new liquidity sources appeared on Pendle. And I would say that as of now, the way we would define, Pendle and thus the sector is we consider Pendle to be a marketplace for liquidity. So, on one hand, you have sort of like PT buyers, they provide liquidity. On the other end, you have protocols, so they receive that liquidity and they compensate with either yields, incentive, points, you name it. And then you have that AMM and YT and PT mechanism, which allows users to sort of like arb and value in real time the annualized cost of that liquidity. So all that to say that the sector is way larger, and it's pretty much, I would say, any type of liquidity in crypto. So that would, summarize the four main pillars that we had for the thesis.
I want to shift to talking about the product a little more in a second, but Louis, just one quick follow-up. You talked a bit about the sector and the market opportunity today. How do you guys think about the market opportunity long-term? Who will Pendle be serving over the next 5-10 years, and what does that market size look like?
So I think, like many VC-backed plays, it's still, it's always very hard to predict how large something will become. I'm pretty sure most of the early investors in Amazon would never have guessed that it would, create AWS and serve a market that is 100x larger than its initial market. So it's always hard to predict. Of course, you can sort of like look at TradFi, interest rates, derivatives. It's an insanely large sector. It's, I think, roughly 500 trillions. So sky is pretty much the limit here. But what I like about Pendle's approach in terms of go-to-market strategy is they always go one step at a time. So they start with a niche, they dominate it. Then they expand, they go to another niche, they try to dominate it, etc., etc. And I think, so the long-term vision is massively big, but the short-term execution is very focused. And we sort of like, really like that way of approaching the go-to-market.
That makes a lot of sense. It's very similar. You mentioned AWS is very similar to Amazon dominating books and moving on to the next task at hand. Tien, back to you. Let's talk a bit more about how Pendle works. Could you maybe walk us through a typical user transaction?
There are largely three types of users. The first group of users would be the liquidity providers. So this group of users, they don't actually have to take sides. So let's say they have an asset. It could be something as neutral as STETH, yield generating. They don't want to speculate on the yield. They don't care about the fixed rate component. So what they do is they provide that into the liquidity. They deposit the asset into the liquidity pool and pretty much just leave it there. So whenever there's transaction, they will be getting a cut of the swap fee. And the unique part about the Pendle AMM is that with the asset deposited into the pool and held until maturity, there's no impermanent loss, because the way we structure the AMM is to have two very highly correlated assets to be in the same pool, and it's basically the PT as well as the underlying. So at maturity, all the PTs will be redeemable for the underlying, and that means every single token in the pool at maturity will have the same value. So this is one very unique property of the Pendle AMM that effectively negates the impermanent loss consideration for liquidity provider. So that's the category one user. Very plain vanilla kind of play. Then there's also another group of users who want to obtain fixed rates, because with the split of a yield-bearing asset into YT and PT, as we mentioned earlier, PT is where the fixed rate resides. structurally, it is very similar to a zero coupon. So let's say today you buy at 90 cents, at maturity, you redeem it for $1. So that is effectively the mechanics of it. So yeah, funds, institutional users, most of the time they would prefer the PT play. So on the UI, they can just select the PT. And depending on the entry, they buy PT using USDC, USDT, and then just holding the asset until maturity would guarantee them the yield. And then the last group would be the YT buyer. So in terms of the process, it's also very similar to how PT purchase takes place, because there will be a segment of liquidity for YT. And if a user wants to speculate on the rate, for example, let's say the implied yield on Pendle is currently lower than the underlying yield, right? Just putting some numbers in place. If the implied yield of the asset is 3%, but the underlying is currently paying 10%. So there's some difference there, and there's a pretty healthy margin for speculation. Then the opportunity here is for the yield speculator to buy YT at a relatively low cost, and then potentially earning up to 10% APY annualized. So this is largely for yield speculator. The quantity is, the trade quantum is typically smaller, but the return sometimes is quite outsized.
Yeah, no, I think that makes a lot of sense. It's those who are trading YT tokens, or YTs rather, it's just very similar to people trading credit markets, right? Maybe back to Louis. Could you maybe paint some differences between Pendle's DeFi model and traditional markets? You brought up interest rate derivatives, which clearly there's an analog here. How do you think about that?
So first, I'll say that I wasn't a TradFi interest rates trader, so obviously don't have that much experience. Our CIO actually comes from that background, so he was that was quite helpful using his experience doing the DD. But I would say, as Tien highlighted, I think the main thing that Pendle really nailed that enables it to sort of like go decentralized, if you compare it to TradFi, is the AMM itself. It's a very thoughtful design. I think it was initially developed by Notional, but you guys have reused it really well. And basically, you are able, in a permissionless way, just like you needed it before, to allow anyone to come in and out, trade in and out of those tokens. It's quite a thoughtful design. It's basically, in a way, similar to what Curve did for PEG tokens. So you concentrate the liquidity within some bounds. Here you have even more constraints, because ideally those trading, that liquidity should concentrate even more over time as you sort of like converge to maturity. So you have a timing element. And the way that was implemented is basically solved one of the main problems that other competitors had before, which was basically way too much impermanent loss, which negated or didn't allow people to trade those interest rates because the impermanent loss was way too high.
Tien, you've had several phases of usage and adoption of the product as kind of primary users. Maybe found good product market fit with points. That's evolved a lot. Maybe just walk us through the phases of usage and of the Pendle marketplace.
With respect to, I'd say the use case, it hasn't changed all that much. It's still largely catering to the fixed rate demand and then for yield speculation. But with points coming about, we were able to use the same mechanics to service a new segment. And I remember in 2024, January, with so much hype going about EigenLayer and its respective ecosystem, there was a lot of demand for points. As a result of that, PT also became very attractive. So just to give a bit more context there, YTs and PTs are inversely related, because when one YT plus one PT, it has to equal to the value of one underlying. So when there's a lot of demand for YT, the price of YT surges, and that also means the price of PT would come down, because when they're added together, they they cannot be more than the value of an underlying. So in 2024 first quarter, we saw a lot of demand for YT because of the prospects of point speculation. And following that, PT also traded at very hefty discount. So if I recall correctly, the ETH fixed rate was around 40 to 60%, depending on the market. And that was a very good trade. And then Ethena came about. That was also a very good trade for, like, it was the first time we had more meaningful traction with a stable coin. Fixed rate was closer to 100%. And then towards the later part of 2024, we started to also offer Bitcoin markets. And I recall, like, Coin Lombard pools, the fixed rate was trading at around 10% APY. So yeah, over time, I think our value proposition has remained largely the same, except that the types of product offerings have changed. So we shifted from being very focused on LRTs to Ethena, and then building up some traction with Bitcoin. And then at the start of the year, it was a lot more focused on improving the diversity of stablecoin offerings on Pendle. So at this point in time, stablecoin represents a bit more than 80% of Pendle's TVL, and the APY generally hovers between 10 to 15%. I also want to say that for most users, the APY matters a lot, but we also have a product offering for protocols. Because of our ability to cultivate and incubate protocols, help them grow traction, we have also become a pretty essential part or go-to-market strategy for many of these protocols. So let's say if there's a stablecoin project, they're very new. They most likely would consider running a points campaign. So Pendle is typically the preferred venue for points because we can offer advice on how the points can be structured. We also have a very systematic way of cultivating traction along with these protocols. So at a high level, we start with maybe 100, 200K of liquidity and then grow it to $1 million to $2 million systematically. And then from there on, we can also offer them advice, introduce them to curators, and then build strategies with money markets to try to bring the growth even further. So I think over time, we have evolved to becoming more of a value-adding partner to high-quality, very promising projects, not necessarily confined to stablecoin, but more recently, it's been largely stablecoins. And I think, with the distribution outlets that we've built up over time, like I believe we just become a much more meaningful partner for these protocols when they consider go to market.
One follow-up on that. Let's say I have I want the yield, right? And I'm buying the yield token. How does the yield get paid out from your perspective? And is it different when it's it seems maybe more straightforward with staked ETH, and is it more complex if you have points to pay out from an airdrop or something like that, like settling that?
So with points, okay, so for different types of users, PT, let's say they invested in SUSDE. They use SUSDE to acquire PT SUSDE. At maturity, they will be redeeming SUSDE. So that's a very clear cut, straightforward. YT, as you pointed out, is a bit more interesting because the yield is, of course, like in the form of USDE, but also they have points. So these points at maturity, most of the time, they will realize into tokens. And what we do at the Pendle end is to have all these tokens claimable in kind. So we don't facilitate the conversion. Users would basically just go to the points issuer. They can see the amount of points that they accumulate by holding the YTs. And then depending on the points, they can convert to XY amount of Pendle the platform tokens. And if they want to denominate the earnings in USDC or USDT, they can do so at their own will.
And maybe we could talk a little bit more about kind of the future of Pendle. So you guys have a pretty extensive product roadmap. Maybe tell us about the upgrade, some of the products that'll launch and the timing of it.
So for this year, there are a couple of things that we want to focus on. Two things mostly. One is we want to enable more assets to be listed on Pendle. So that's why we have the self-listing portal. As of April to May period, we have on approximately 24 markets. So on average, a little less than one market per day. Largely stablecoins, but we've also supported ETH markets, BTC markets as well. But moving forward, we want to remove Pendle to basically make Pendle less and less of a bottleneck for asset listing. And we want to offer that infrastructure for points and yield to be traded on Pendle to any protocols with very little interference from the team. So that's one. And then distribution for Pendle V2 assets is also another big part of this year's focus. Because I think over time, when it comes to the positioning of Pendle in the segment, eventually, I think one way we can establish strong moat around Pendle is to have very, very strong distribution outlets. We started with having PTs accepted as collateral on various money markets, starting with Morpho and Euler. And then recently, we've also had PTs of SUSD and EUSDE accepted in Aave's core instance. So collectively, both markets have already exceeded $1 billion in TVL on Aave. So we need to continue to cultivate that, because what it means here is that, like, in the future, if a protocol gets listed on Pendle, these are the prospects that they can expect. They can rely on Pendle's network and access to grow the TVL, offer various strategies through money markets. And of course, like, beyond just money markets, the assets can also be used for various vault strategies. And eventually, I think further down, we also want to make it available for easy purchase through aggregators or like wallet interfaces. So that means if you're using Ravi Wallet or MetaMask, you should be able to acquire fixed rate directly without having to go to the Pendle UI. So these are like some high level implementation that we want with Pendle V2. And then just very quickly to touch on like second half of the year, I want to say bridge PTs across non-EVM ecosystems is an area of focus for us. So because conventionally Pendle has been just living on EVM networks. So Ethereum is our primary deployment network, and then Arbitrum, Base, Optimism, BNB Chain, etc. But we also want to take a step further and making some of our markets available directly on chains like Solana or Ton. So that's coming up in the second half of the year. And one more aspect is working with Edina to enable like institutional products. So basically, IUSDE should have like a PT version of it. And that implementation is going to be carved out and isolated from the existing pools. So that is also something for us to work towards in the second half of the year. And yeah, the other piece, very, very important for us, is Boros, which is the new product for the trading of funding rates. So, I mean, at a high level, this is a yield swap protocol with leverage. So directionally, it aligns with how Pendle, the vision of Pendle, which is to make rates tradable. But in terms of implementation, it's very different. It is it will not be touching points. It focuses quite exclusively on funding rates in the beginning. Yeah, and then we will try to cultivate the market and hopefully enable new use cases with the ability to get the funding rates to be traded.
Louis, maybe to kick it back to you. You mentioned earlier how part of your thesis around Pendle was you really like how the team, gets into a niche and they'll dominate it. Tian just described a lot of interesting products in areas they're entering into. Which ones of these are kind of, no crystal ball, but if you had to think about which ones you think could drive the most growth of them, and like maybe the market sizing impact of those, how do you think about that?
So I think for the next iterations and next updates in Pendle, it's going to be slower, but it indeed tackles a way larger market. The let's say the parts of the roadmap that we're quite excited about are, I think, Boros as well as the permissionless markets. So obviously, permissionless markets, that's massive. Any protocol can just plug on top of it and use Pendle to bootstrap their liquidity, reward any users, liquidity providers. And when it comes to Boros, I think it will enable more precise and scalable yield trading. It may be like Uni V3, so initially it will probably be a little slower to take off as market makers have to integrate on the platform, as users have to maybe understand the differences, but it will enable 10x larger use cases. And I think, as I said earlier, pretty much the market is the market for Pendle with this is any type of liquidity in crypto. It's a marketplace for liquidity, and you can be pretty creative with it. It's not going to be only lending, but it can be anything. You can imagine at some point vaults for providing liquidity on perp exchanges. You could do a lot of interesting things that are tokenized, and people just deposit. They want a fixed yield, and then there's going to be YT traders who are going to sort of like orbit around and speculate around the precision of those yields. So all that to say, quite hard to predict what will be the next 10x improvement, but I think now sky's the limit.
Tian, can we unpack Boros a little more, because it is a unique introduction to the product. I guess what is the core user that you are meeting with this perps product? Is it just allowing people to trade rates with leverage? How did you think about bringing this product to life?
I guess to introduce Boros, I should also start with the motivation for why we want to do Boros. Funding rate is going to be the first use case of Boros. And just zooming into funding rates, it is a very essential component of perp markets. And as we know, perp products are the most traded liquid products in the entire crypto. On average, maybe around $200 to $300 billion of trading volume. And right now, every single position on the perp market is subject to funding rate exposure. And there isn't a very good way, at least not at scale, for these rates either to be hedged or speculated. So when we were thinking about the construct of Boros, we wanted to create an instrument to address some of the shortcomings that we see with funding rates today. And we wanted to also offer high capital efficiency, so that it can be a meaningful instrument for, let's say, yield speculation or hedging purposes. Now, just going through like a very typical use case, right? Ethena would be a pretty good example here, because Ethena currently is largely powered by funding rates. So what they do at the back is they would establish a long spot position and then short perp, and then subject to the funding rates. Depending on the market, the rate that they expect to receive fluctuates quite widely. So in a relatively quiet market, bearish sentiment could be 2 or 3%. But in a very, very aggressive and excited market, it could be as high as like 40%. But they are typically at the mercy of just market sentiment. So what we can offer here with Boros is for protocols like Ethena, funds that have similar kind of position, to short funding rates when say funding rates at like trading at a very healthy level of 10, 20%. So we see this group of users to be the natural shorts. And then on the other hand, natural longs would be options desk, right? So when they sell options, for example, they need to hedge it, and typically they would hedge it on perp by having long positions. So when they long on perp, they would be required to pay funding rates. And again, same thing here, right? When they don't have the ability to fix the funding rate, they are also at the mercy of the market activity. Sometimes they pay more, sometimes they pay less. And because of the volatility, it could impact their P&L. So what we offer here with Boros is a value for them to lock in the amount that they pay. So when we bring these two sides together, one side wants to lock in the amount to pay, one side wants to lock in the amount to receive. Boros becomes the marketplace for these interactions to take place. And then on top of that, there could be speculators to participate in the market as well. So let's say in the case of speculator, it's actually pretty straightforward. If they think that if they think that the funding rate could go up in the next 8 hours or 24 hours, they can long it on, they can set up a long position on Boros and then just exit if they realize the gains, or if whatever they want to. And then conversely, if they feel that in the next couple of hours the funding rate is going to go down, they can short it and then make some money by doing so.
Tien, that's really exciting. I think it's a good use case for people hedging. Can you mechanically, right, like implementing this kind of market, it seems like it might be a little different to implement than some of the other interest rate markets. Can you explain it to us, how that flow works?
There are actually quite a lot more, but I'll try to condense it. So because it is a derivative market, we would have to rely on an oracle to extract the funding rates from, let's say, centralized exchanges to make it available on chain. Now, in the beginning, we're going to be pretty vanilla, like what Louis said, right? In the first couple of months after launch of Boros, it's a lot of education and it's a lot of product iteration to refine it so that, user experience can be improved. So like from the mechanics perspective, we will start with vanilla markets like BTC USDT and ETH USDT on Binance. And every 8 hours or so, the oracle will pull the numbers from Binance and then make it available on chain. And with Boros, any participant on Boros would have to deposit collateral if they want a long or short yield. So using that number from using the funding rate made available on chain by an oracle, settlement between the long side and the short side would happen in accordance to the funding rate that was published.
I think that makes a lot of sense, and I think there's going to be a lot of demand for that product. Maybe we can move on to talk about adoption, give investors a feel for both you, Louis, and Tien are looking at in terms of key KPIs. Maybe we start with Louis. From an investor's perspective, which adoption metrics do you view as the most important for Pendle?
I think pretty straightforward. I would say for us, three main ones that we look at quite actively. It would be TVL, daily volume, as well as annualized fees or revenues for the protocol. And if I remember correctly, when we invested, so let's say around November, December 2023, TVL was probably 200 mil. So I think since then, at least at the all-time high, it's roughly 30x. Daily volume was probably 1 million. I think it's maybe 100x at the peak. And in terms of annualized revenues, they're probably also 100x. So those are the type of metrics that we actively track and that are, I think, extremely important. Of course, you need to look on a long enough time frame, but the trend is pretty clear. It's going up. Apart from those quantitative metrics, there's also a few qualitative things that we monitor. It's maybe a bit less about adoption, but more like monitoring of the position as well. And here I would say two things, or maybe three things are extremely important for us. It's going to be product innovation updates, so new products coming up. Of course, Boros, permissionless markets are great things that fall within this category. It's going to be team's commitment. Are they still focused? Does it feel like the team is still committed to growing this protocol on a long time frame? And last but not least, we really like to sort of like reconstruct the token cap table in a sense. So pretty much have all wallets labeled on chain, alerts, and we just monitor any flows that happen in and out, any people coming in, out, selling, any in and out flows from the team wallets, ecosystem wallets, as well as changes in TVL. Those are the type of things that we monitor to see how the other team investors, insiders are moving their positions around.
That's interesting. Can we talk about that cap table monitoring a bit more? So are you implying that perhaps there are very concentrated positions in Pendle that could perhaps move price significantly in one way or another should appetite for those positions change?
What's interesting with Pendle is that actually it's the cap table is pretty distributed in a sense. So as I mentioned earlier, a lot of the early investors, either sort of like capitulated at the bottom of the bear market when they were, cleaning their books of 200 lines in 2022 post FTX. And over time, new people started coming in, random community members got in at a low price. So what's interesting is it's very diversified across a lot of community members. I think random wallets who bought over time, very strong power users. When it comes to some of the main wallets, they're, different whales, I would say, in terms of notable names. There's going to be Binance Labs, Spartan, who I think have been very, very strong diamond hands, have held over time, as well as us, and then plenty of just different whales, DeFi per users. So it's interesting. The supply is very diversified, and overall, what's very clear is that since Pendle has been performing well, so let's say mid 2023 to 2024, most of the whales haven't sold. Some of them are actually accumulating, just like us. So, but it's something that we monitor. I think it's important to track the cap table. But I would say, most of the largest wallets are strong hands, and I think have long-term conviction in the team and the protocol itself.
Tian, back to you. What KPIs? I assume they're probably going to be a lot similar, but what are you most focused on? And I'm curious, is there any guidance that you can give us on your growth targets? Where do you think these KPIs will go, and how will they evolve?
Yeah, so the top ones are consistent with what Louis mentioned. So TVL and trading volume and revenue. But I want to say they're all quite related, because revenue consists of, at this point in time, revenue is made up of part TVL and then part trading volume. So we have two streams of revenue. Firstly, it's 5% on yield that the underlying generates. And then the other parts would be, the swap fees. So the more TVL we have, the higher the YT fees that we can collect. And then similarly, the more trading volume on a daily basis over a longer period of time, that the higher the fees that the protocol collects. Unfortunately, I won't be able to provide any kind of guidance. I want to say that because everything kind of gravitates toward these three high-level metrics, we actually run a lot of projects, internal projects, short-term ones with very different KPIs. So from time to time, maybe just recently, the one that we've concluded internally was the number of markets listed on Pendle, because the self-listing portal was very new and it wasn't getting a lot of traction. But we needed to make sure it works. So we constructed a short-term project with a very specific KPI for that particular project in order for us to kickstart the self-listing portal. And then moving forward, we would also have very different kind of projects numbers for Boros. Once we launch, maybe we just want to focus on the number of daily users and or the amount of time for us to respond to their queries. So these are the various small KPIs that we also operate on, but they change all too dynamically. But eventually, everything gravitates towards the three that Louis mentioned.
If I may jump in here, just one thing about I think that's interesting about revenues and fees with Pendles is generally if you look at crypto protocols, there's basically two main types of business models. You'll have the volume-driven business models, so that is the pump fund, Uniswap, PerpDexes of this world, and you're going to have the TVL, AUM business models. So this is going to be more like Lido, Aave, and what's interesting is volume-driven business models. They generally tend to be very significant over short periods of time during bull markets, mania phases. You can make a lot of money because people during those phases are quite price insensitive. When it comes to TVL business models, they're more sticky over time. People are more price sensitive, but they're larger in size. So they provide, let's say, a strong base of revenue that is, let's say, quite more stable over cycles. And on top of it, you have the volumes, which are, way more cyclical. And I think Pendle is quite unique in the sense that it kind of sits at the intersection of those two business models. You have the AMM fees, so those are very correlated to the volumes, and you have the YT PT fees, which those are more like related to the TVL and are more stable over time. So I think it gives it sort of like a unique resilience, sort of as base fees with a TVL, and that optionality of volume fees.
And just for either of you, just to give listeners context, right? We're talking about the TVL and the volume and the fees. Kind of, you can pick, some time frame, but roughly where is that at today?
Like today, TVL is about $4.5 billion. Trading volume as of yesterday was $124 million. So I track that every day. But I want to say, in a more bullish market, the trading volume would be around $100 to $150 million. In a not so good market, maybe in like the March, February period, it would be usually half, like $50, $75 million. But TVL has sustained quite nicely over this period.
And then, so what is that? And on a fee rate, I guess it obviously depends on where the yields are at, but that's maybe 25. What is that? 25 million, 30 million?
Yeah. And annualized is about that.
And that's helpful context. Yeah, Louis, I think that's a great point on the cyclicality. It's kind of like how Coinbase has transitioned from being this kind of pure trading revenue business to they want to have more of these services. They want more custody fees, right, to kind of smooth out that. And I think there's obviously good reasons why that's a good business model to have. On the tokenomics, how does the value accrue back to the token? So you have these fees. How does that flow through the protocol?
At this point in time, the protocol collects a fee. So from the two main revenue streams. At the moment, all the fees accrued will be distributed back to VE Pendle holders. Now, so Pendle on its own does not have any utility. It has to be locked up in the form of VE Pendle in order to be entitled to these fees. But these fees are not automatically given. So it requires the VE Pendle holders to vote for pools, because on a weekly basis, there will be new set of tokens that will be released for a liquidity incentive. So the distribution of the liquidity incentive will be in accordance to the voting outcome. So in this case, let's say if you vote for pool A and pool A has 40% of all the liquidity incentives, and then as a voter, whatever fees that the pool generates will also be, you will also be entitled to it, prorated.
Is that how you envision the economic model of Pendle long term? And I asked this because I've talked to some other funds, and what I've been told, and I don't know if this is speculation, they've been told that this isn't, maybe there's a better way to do it long term, but this works for now. Is that how you think it evolves long term?
Yeah, I would think so. Because right now, like with V2, this is the current state. And At this point in time, we prefer not to make drastic changes to it. But with Boros, it's going to be a new revenue stream. But it's very difficult for us to commit to any kind of fee distribution mechanics with Boros at this point in time, given that the product is not live yet. We prefer to take some time to review, find PMF, and then from there on, we can better evaluate what would be the preferred token mechanics, and then make the necessary adjustments.
And just for context, like how much, I mean, I go on the Pendle website and VE Pendle, I see some are making like 30%. Like what's the, if you are participating and like there's different locking and what does it look like from a return perspective?
Historically, the APY for VE Pendle is about 30%. But of course, like it's a spectrum. Some people make more, some people make less. It all depends on how skilled you are in voting for pools. So it's a fairly interesting exercise because like we do see on a weekly basis a lot of VE Pendle holders will go onto the portal, make the votes based on their understanding of how the traffic would flow in the next epoch, usually over 7 days. And then, at the end of the week, they would know how well they perform. So it's a bit more of a predictive exercise there.
So there's an element of performance involved with being, getting paid out in Pendle. As part of the whole VE tokenomics, right?
That's right.
Can we maybe talk a bit more about the supply side of Pendle? I think, can you maybe run us through the total circulating supply, emissions, and perhaps discuss the true float? Because, you have these VE tokenomics. Should investors be considering those as part of the tradable universe of tokens?
Pendle token, by and large, is fully vested. The only part that is still vesting is the liquidity incentive. And when we created the token, we had it programmed such that there will be a weekly emission of liquidity incentive, and it will decrease 1% every week until April 2026. So we're still about a year away from the full complete emission. Now, if when that happens, then the total circulating supply would be in the range of 280 million units of Pendle. At this point in time, I believe it's closer to 250 million. Every week there's about 120K of Pendles getting emitted through liquidity incentive. And then 61 million of that is in the form of VE Pendle locked up in a contract. But if I recall correctly, it's approximately 180 million units of Pendle that's outside of team control already.
What is the average duration of locked Pendle?
Average duration would be about 1 year. It says here 385 days, actually. So slightly more than a year.
Can I follow up just with a question? And maybe, Louis, for you too, since you're pretty intimately familiar with the supply. Like if I look on Coin Market Cap, for example, or even Token Unlocks, they say the circulating is like 160 versus 282. And you, Tian, I think you said maybe like 180 outside of team. Is there some team component held, or like how do I just reconcile just those numbers?
The largest portion for the team is in the ecosystem fund. That works out to be around 18 million units of Pendle. Outside of that, the rest are fairly negligible. Yeah, there's a portion in team allocation, but within the team's control. But it's all vested for team members. Usually starting at the point of their joining of the team, and then vest over 2 years, 3 years, or 4 years.
I think that there may be as well a slight maybe miscalculation, whether it's on CoinMarketCap or CoinGecko, because they account for sort of like all the future inflation but the reality is, if you look at the supply right now, it's pretty much, yeah, everything is liquid. And then, as Tien mentioned earlier, we're going to reach, I think, a terminal inflation of around 2% per year, something along those lines, and then which is going to be stable over time. Yeah, otherwise, yeah, most of it is liquid. Early VCs from 2021 or fully vested. Yeah.
Louis, maybe over to you in talking about the token. In your view, what makes it an attractive investment compared to other DeFi tokens, specifically focusing on supply and demand dynamics that we just discussed?
Obviously, the first straightforward elements are the fact that it's highly circulating. The VC ownership overall is extremely low relative to any other token in the space. The deeper fact that we really liked and that I think is extremely rare is the team's focus on redirecting all the value to that specific token. And that is quite rare. And I'll expand here, but the one of the main problem that we currently face with tokens is the fact that they are not most of the time legally binding. And most teams can pretty much do what they want. They can come up with new tokens. They can redirect most of the value to some type of company, equity holders, and that's what we're seeing a lot out there. What was different, it seemed, with Pendle is that they are accruing all or most of the value to Pendle through that Pendle staking mechanism. They seemed at the time to be very focused on the idea that is sort of like in a sense equity-like token, and that they were not going to come up with new extra tokens in the future. I mean, I know many teams out there which, for instance, would come up with a new Boros token instead of accruing all the value to Pendle itself. They would come up with a second token and, in a sense, double dip. Or they would have some equity company behind that accrues all the value. And so that is quite unique when you have a team that has such a long-term vision and really wants to accrue all the value, all their efforts will then accrue to that underlying token. I think it's quite rare, and it's an exception that we really like and that we want to back. And there are other similar, I think, examples in the space now that people are looking at and are excited about. And Hyperliquid, for instance, would also be another example that I think is similar in a sense, right? It's all the focus is on the main token. So that's what we really like.
Does the token get to vote on changes, like if you wanted to change the fee rate or from a governance perspective?
No, not at the moment. So the token, like Pendle, only votes for the incentive distribution. But further down, like we could open up like more types of proposals for voting.
And is there like a labs, or there's no company, right? Is there just a foundation, or how is that governance set?
At this point in time, like when the token was issued, it was issued through an offshore entity. But right now, it's a labs and foundation kind of setup.
So maybe we can chat a bit about regulation. That is a topic du jour in the US, specifically around stablecoins, which has been a huge tailwind for you guys. I'm curious, we'll start with Tien, then we'll go to Louis. How do you guys think about stablecoin legislation and how it may or may not influence Pendle adoption?
I want to admit, like, I'm not the most informed with the stablecoin bill, but from what I can tell, at least at a very high level, like it should help with, it recognizes stablecoin, and it should help with the overall like TVL, like growth and traction for stablecoin. So that means, like, for us as a protocol operator, it becomes even more important for us to lean into this movement. So we see, like, with this bill, we see even more stablecoin yield opportunities that will emerge in the next months or years, and we need to be positioning Pendle such that we're at the top of mind for all these yield opportunities. Because eventually what we want to become is, for anyone who wants to earn yield on stablecoin, more specifically because of the narrative around stablecoin right now, they should look at Pendle, and we should have a thick library of yield opportunities. So that's why having that self-listing portal is so important at this current moment, because if we continue to be very, very involved in the setup of markets, we could potentially bottleneck our listing process, and we miss out on a lot of these opportunities. So now the better play for us is to recognize that there will be a lot of stablecoin yield that will emerge, and we need to remove ourselves from becoming the bottleneck for these assets to be listed on Pendle, and to the best of our ability, offer them an avenue to get their yield-bearing asset listed, and then we use our distribution channels to help cultivate the TVL growth for these respective yield-bearing assets.
Yeah, I mean, I'll add something on the stablecoin bill. Obviously, it's changing a lot, and you don't know the exact form yet with the amendments, so it gets fully through. But I think the consensus is like you can't have yield-bearing. There's payment stablecoins and yield-bearing stablecoins, which are securities, but then there's like maybe the ability for tokenized deposits. I've got to imagine at some point you're going to have, and this is just my view, you're going to get to the point where these tokenized, maybe the banks are going to be able to offer tokenized deposits and pay interest just like on a, I have a CD, right? Or I have a deposit. And then if that can be in a wallet in DeFi, I think there might be some ability if you're a depository institution, or at least there was in a prior iteration of the bill where it wasn't explicitly stated, but you could have, taken that and done that to do that. And I think that could be a big market. I think there does seem to be this theme of other funds that I talk to that are starting to comp you guys like the stablecoin proxy for that growth. Maybe it's a good narrative to be in, and we'll see how it evolves. On the competitive landscape side, or Louis, did you have anything you want to add? Or
I think that's very well summarized. Overall, I don't have any regulatory edge, but putting the bill aside, I think it's quite clear if you zoom out that stablecoin supply is probably one of the top metrics in crypto that is up only, and this is not surprising as the space matures and gets more institutionalized. I think institutions will expect to behave and trade in crypto as they do in traditional finance. And most institutions, most funds, most banks think in dollars. They think in the base asset. I remember when I joined the space in 2019, most tokens were paired in Bitcoin, so you would trade against Bitcoin. Now that, of course, doesn't exist anymore. They're paid in stablecoins. It's the same for perps. It's now becoming the same on chain as well. I think this trend will overall keep on increasing. And obviously, Pendle, by being a liquidity marketplace, will hugely benefit from this.
Tian, can we talk quickly about the competitive landscape? Do you really have any competitors that you see? And who are you confused with sometimes in the market?
At this point in time, we've been very fortunate to be able to operate with our own means, and I think in various ecosystems there would be protocols that are very similar in nature to Pendle in offering the PTYT trading capabilities. But by and large, we're starting to see protocols that are similar in nature emerging in some of the ecosystems that we operate in. Moving forward, how we intend to stay competitive and construct a moat around our product offering is firstly to really look out for high quality, good opportunities for our users, and then constantly stay on top of mind for both among protocols as well as users. And then, very importantly, we also need to work on our distribution channels. Basically just having PT, YT assets to be accepted across as many venues as possible. And I believe that if we can do those things well, we should be able to stay ahead of other protocols.
Tian, I really appreciate you being generous with your time today. You as well, Louis. Want to wrap things up with talking about catalysts and risk. We talked a bit about catalysts, about product updates, but I'm wondering if there's anything that investors should be aware of on the catalyst side, and then follow that up with how you think about risks as a founder of a protocol.
So in terms of catalysts, I'm personally most excited about the launch of Boros most immediately, because that's really something quite immediate. We're like with Boros, it is 0 to 1 product. So we're going back to the grind again to try to figure out the PMF. But I think the potential for growth is very significant over there. And of course, like going back to V2, it's really about like supporting as many high quality assets and offering very compelling yield, especially on stablecoin to users. So making these opportunities available outside of EVM ecosystem is another thing that we are also very excited about, but likely coming in the late Q3, early Q4 kind of time frame. And yeah, finally, with respect to risk, I think there are definitely many risky components in the segment that we're operating in, markets, contracts. But I'm personally most guarded about complacency. So because like with many of these risks, right? Like sometimes it happens because we make certain decisions. But as long as we stay nimble and have the humility to acknowledge that we've made mistakes, we can typically reverse that and then just do things differently moving forward. Usually not too big a deal. But the moment we start becoming complacent as a business, then I think that is likely going to be the start of the downfall. And I never want us to even go through that.
Tien, Louis, really appreciate you guys joining us today. Hope we can do it again soon. See you next time on Level Up.
That's a wrap for this episode of Level Up, where liquid token protocols meet the sharpest minds in institutional investing.
If you found value in today's conversation, don't forget to subscribe and share it with your network.
For more deep dives into blockchain's most compelling projects, reach out to us or follow the Medici network for more insights. Until next time, keep leveling up.